Small account traders think that they need to trade credit spreads or risky leveraged ETFs. But the truth is, there are plenty of solid stocks under 20 bucks that you can sell puts on safely. So I'm going to do a short series where I walk through about a dozen stocks under 20 bucks that people with smaller accounts can really look at and how I would think about selling cash secured puts on them. Today, we're going to start with BBAI and SOUN. Now, starting with BBAI, ticker BBAI, AI obviously has a lot of hype, right? But this ticker is a little bit different in that it has a lot of governmental contracts. It's only trading at about $6 a share. In fact, December 12th, it closed at $6.38. Now, the implied volatility is super high, typically over 100% for this particular ticker, and there's also lots of volume. So it makes for getting in and out pretty easy. Now, I'm always typically looking at weekly contracts for two reasons. You want to create yourself income on a regular basis every single week, and you also don't want to tie up your capital for an extended period of time. So all the contracts that I review in this series are going to have an expiration date of December 19th. And assuming Big Bear stays around $6.38 per share, I would probably sell a $6 put. The $6 put closed at $16. So you're taking in $16 right away, and you're committing to buy 100 shares, but only if BBAI drops below $6 before the contract expires on December 19th. If it doesn't drop, you don't buy the shares, and either way, you keep the cash. Now, I'm always going to calculate the rate of return before I make a trade because I want to know if it's a good deal or not. So if I was taking in $16 and I'm putting up $600 in capital, that's a 2.6% rate of return for 1 week. It's pretty good. Now, keep in mind, you want to choose a strike price at which you're okay buying the shares if it drops below that price. You could also trade the $5.50 put. That closed at $6. So if you're making $6 and you're putting up $550 in capital, you're still making a little bit more than 1% for 1 week's time. You just want to keep in mind that if your premium is pretty low, the commission that you pay on the trade is going to be kind of a high percentage. So you just want to be aware of that. And as always with all short puts, if and when you get assigned, you can turn right around and sell a covered call on those shares. That's called the wheel. Now, keep in mind that you want to keep cash on the side because if the stock were to drop more, you want to have enough capital to sell another put as the stock goes lower. That way, you take in more income, number one, and number two, if and when you have to buy those other shares, you're averaging your cost basis down. Okay, next I want to go through SOUN, and the ticker on that is SOUN. SOUN is a voice and conversational AI company, and they last traded at $11.65. Now, SOUN is pretty similar to Big Bear AI in the sense that the volatility is super high, about 90% or so. That means it has a lot of swing. And when it has a lot of swing, I can feel very comfortable that if and when the stock drops and I have to buy those shares, it's very common for it to bounce back up. SOUN also has a lot of volume. These are very popular tickers that many people are trading. So with SOUN, you can perhaps look at the $11 put, and that closed Friday at $21. Now, if I'm making $21 and I'm putting up $1,100 in capital, I'm making almost 2% for 1 week's time. Very high rate of return. And the reason the rate of return is high is because it has a lot of volatility. If you want, you can also go a little bit more conservative and, for example, sell a $10.50 put. That last traded at $11. So that rate of return is still a little bit over 1% for 1 week's time. Still a very good rate of return because that means you're making like 52% per year if you were to do a trade like this once a week. And believe me, there are many, many trades like this to replicate on a weekly basis. Now, one thing I want to encourage you to do is always check when earnings is before you put a trade in. Usually, right before earnings, there's a lot of volatility, so you may not want to take on that added risk. Now, this is the first video in the series. Tomorrow, I'm going to walk through two other tickers, also under $20, that you can look at for selling puts. I want to give people with smaller account sizes lots of different ideas on making income on a regular basis. And I encourage you, as we walk through these videos, not to focus on the dollars that you're making, but the percentage rate of return. I also want to keep these videos super short to give you a variety of ideas without overcomplicating things. Now be sure to tune in tomorrow so you don't miss out. See you tomorrow.